Hey everyone, so this is going to be my next video. I haven't made a video in about, I think, a week or 10 days. I was out on vacation for the last week or so I wasn't able to post as many updates as I usually do. I just flew back in the day before yesterday, so I'm back and I wanted to make a video update on the bigger picture as well as the short-term action that we've been seeing. Getting a lot of people asking me what's an update on the bigger picture in the grand scheme of things, and so I'm going to be making this video today. The last one I made, I think, is about 2 weeks old now. And I talked about 3 or 4 different possibilities and scenarios that we could be seeing, and those are all still valid. So this video will update you guys on that last video, explain what we're seeing today and how it fits in with what I explained prior to this. So if you guys haven't seen the original video I made of the big picture, it was called something like Bitcoin heading to sub 6,000 and the end of the correction, something like that. That was the title. I would recommend go checking it out. You'll see that today I'm going to talk about those same scenarios and how they've evolved over the last few weeks to give us what we have today. So starting off with the bearish case, and really at this point, I do have a bullish case I'm going to present, but I find it very unlikely, and I'll explain to you those reasons why soon. As far as this count goes, this entire structure here, there's a few different ways to count it, and I talked about that in my last video, so I'm not going to go over it again. I'll just show you what I think is the most likely count at the moment based on what I'm seeing. So I have the current bearish case as a WXY double combo correction. Wave W being an ABC, the X wave being a flat, a ABC flat correction, and then our current C wave, or our current Y wave, which is what we're working on, being an ABC correction. So in my prior video, I said I wouldn't expect us to go below $5,200 before a big bounce, and we stopped at $5,800, and we're getting our big bounce now. What I had expected was us to bounce up a little bit more and come down one more time for that 5.4 to 5.5K level. That was really the sweet spot that I was looking for, and we didn't get that. We bounced a little bit early. We officially broke $7.1 thousand, which invalidated my short-term bear counts. So I had to assume that this particular move we're seeing after we broke 7.1K is now officially that big bounce that I was referring to that we were going to get. And that big bounce, like I said before, I was expecting to be more of a relief rally. I didn't expect it to be the end of the correction. I didn't expect it to be the end of the crash. And I said specifically that the only thing that would make me somewhat bullish in the short term is to see a break over $10,000. If we were to break $10,000, it wouldn't make sense for the counts for the most part, and so I'd have to assume that we're headed somewhere higher, and I'd be a lot more bullish. But what I'm going to talk to you guys about today is where I see this going currently. I'm going to show you the bearish case here. I'm going to show you the bullish case, which I think is weak, but I'm going to show it to you nonetheless. So regarding the bearish case, we have WXY. Currently, we're on our Y wave, and there is you could argue that this structure here was the Y wave in its entirety. But I would see a clear 5 waves here, and I don't see this being a Y wave. A Y wave would need to have a triple wave structure like an ABC, either a flat, either a zigzag as I have it pictured here, but it couldn't just be one single 5-wave impulse. So as far as the 5-wave impulse goes, the way that I'm seeing it, and I won't go into the small details here, but I was seeing something like this in the bullish case of the 5 waves, which we completed, and now I see a corrective wave, and then I see us going one more leg down to complete this Y wave because we need to have, like I said, a 3-wave structure. So unless this particular count here was somehow a 3-wave structure, which I don't see it as being personally, we still have lower to go before we complete our Y wave. So this is the bearish case, and now working on a B wave, which is a 3-wave structure. As you can see, a very clear 3 waves here, and then I would expect us to come down for the Y wave. So if you remember in my past videos, I showed you a few different scenarios. This is going to be the bullish case. The bullish case, it's another scenario that I did talk about. Personally, I don't like it, and I'm going to go over that reason right now about why I don't like it. So I have this in, again, a WXY. However, in this WXY, our X wave is this 3-wave structure here, this ABC. And then we have this ABC being our Y wave, which completes right over here. Where is it? Let's see here. Yes, our Y wave completed right here, and we've now started what would be a new impulse wave up, or another X wave like we had here to give us a WXYXZ. So if this were an X wave, it would be a 3-wave structure. If it were the start of a new impulse up, it would be a 5-wave structure. And that is where we are today as far as the short-term counts go, and we'll talk about that a little bit later in the video as well. For right now, this is my primary count, the bearish case with a WXY. Now, there are some other ways this could go. For now, I'm looking at this. I'm looking at this particular structure. Once we complete the next big movement here, we'll talk about some possibilities about how this correction could extend for an even longer period of time, which I did cover in the original video that I mentioned earlier. So if you do want to see that right away, go ahead and watch that now, and you'll see how this can extend longer. But for now, we're going to assume that we're seeing a WXY to complete the correction. And so we're looking for at least one more wave down for this to complete this Y structure. Now we're going to go ahead and take a look at the short-term counts, what we can expect here, the bullish and the bearish counts. So like I said, if this is the bullish case, okay, if we're seeing a bullish case here, this is likely going to be a 5-wave structure, right? If we're seeing the bearish case, it's going to be a 3-wave structure, which is now completed, or almost complete. And let me just draw this out so you guys can see what I'm talking about. So in the bullish case, a possible 5-wave structure. In the bearish case, a 3-wave structure to complete our B wave, and then another impulse wave down to complete this Y wave. So we'll have something like that, right? And now we'll take a look at the short term, the immediate movements that we're seeing now and what I'm expecting. So let's first look at the bullish scenario, right? So in the bullish scenario, in my prior videos, we talked about this confusing structure here. It had the 3 waves up. We thought, hey, it must be a diagonal of some sort, or it could be a continuation of this structure here, in which case I had this as a wave 4, and then I had us coming down. Now, as you can see, we came down a little bit, but then we shot back up. So I'd have to believe that this is now a first wave up as a leading diagonal with a expanded flat correction. So let's show you guys this here. And this count was not one that I came up with myself. I saw it posted by a few other guys on Twitter, so I'm not going to take credit for it. It's just what I saw, and now it looks to be the most viable count for this particular situation. So actually, here you go. Let me see here if I can make this a little bit more clear. So we had our 1, 2, 3 waves. That's our first wave. 1, 2, 3. That's our second wave. 1, 2, 3. That's our third wave. 1, 2, 3. Our fourth wave, and 1, 2, 3. Our fifth wave. So this structure here was our leading diagonal structure right there. And then we got something weird, and this is what kind of threw everyone off, including myself. We dipped down, and then we shot up and made a new high up here. And the only time that we would expect to see that is with an expanded flat, unless it was part of this structure, which is what threw us off. So we would assume that this was our first wave up. We had an expanded flat, or a running flat, I can't remember exactly which one it's called, which is going to be a 3-wave ABC structure starting from here, where the B wave goes above the start of the A wave, and then the C wave goes below the end of the A wave, and this would be the entire flat wave 2, and then we got so this was our 1, this was our 2, and then we got our third impulse up. So this could either be an A, B, C in the bearish case, and in the bullish case this would be an A, or this would be a 1, 2, 3, 4, 5, right? So if we're going to assume that we're in the bullish case right now, then after we complete this third wave, which we'll talk about as well, we would dip down for a fourth wave, which technically should not enter wave 1 territory, so we'd look for it to hold at about $6,800, and then we pop up for a fifth wave impulse that'll take us much higher. So this would be the bullish scenario, and this is what we're looking for soon. Now on the bearish side of things, this chart is quite messy, so I'm going to go over it. Hopefully this won't be too hard to understand. But on the bearish side, we have this as an ABC instead of a 1, 2, 3 like we had in the bullish count. So bullish would be 1, 2, 3, 4, 5. Bearish is just going to be A, B, C, and then we continue much lower to complete our Y wave as I pictured here. So A, B, C, and then a 1, 2, 3, 4, 5 for the Y wave. Now, the reason I'm leaning bearish here, if we look at this chart, I posted this on my Twitter earlier as well, and I know it's a bit messy, but I want to get across the idea that we have confluent resistance at around 7.8K at this zone right here. So I'm going to show you guys what that means exactly. So when I say we have a confluent resistance zone, basically it means that there's a bunch of resistances here that are all aligning up together to make this resistance extra strong. So what I'm showing you guys here is this is the daily chart, keep in mind. Here we have the 200 EMA on the daily, currently sitting right at around $7,880, acting as resistance. The last time we popped over it, we got rejected by this trend line here. So if we connect the last two peaks of the last two highs, we have this peak, and would you look at that, this lines up exactly there with the 7.8 thousand as well. So we have this downward sloping trend line along with the 200 EMA acting as resistance right around 7.8K. On top of that, this entire structure from this last high of $10,000 down to this drop here, so this complete wave, the 50% retracement level is also at 7,866. So now we have the downward sloping trend line, we have the 200 EMA, and we have the 50% retracement level all right here in this zone acting as resistance. If we manage to get past the 50% retracement, we're looking at the 61.8. That's going to be the golden pocket, as they call it, which is what they say is an algo zone to short or long, is a 61.8% retracement. So that's at 8.4 thousand. So even if we manage to get above this resistance, this cluster of resistance, we'd find some even stronger resistance here at this 8.4K level, or 8.3 to 8.4K level. And then to top it all off, this zone over here, as we can see, this acted as support here, We broke down from it again, and now it acted as resistance. So not only do we have the downward sloping trend line and the 200 EMA and the 50% retracement level, we also have this particular zone that has acted as support and resistance multiple times, and since breaking through it last, it is now acting as a resistance level. So a bunch of resistance in this area that I think will keep us from getting through. I believe we may wick past it possibly, but I believe we'll get rejected here, which complements the bearish case of us getting rejected here, and this being a three-wave B, and then continuing lower to complete this Y wave. So this is why I'm leaning bearish still. On top of that, to top everything off, everyone was really excited when we popped up here. But I mean, look at the volume. The volume is, to say the least, weak. The volume that we got for that day and for the following days didn't exceed the volume of these red candles here, and is much less than all the volume over here as well. So this type of volume does not say, bull run to me. It says relief rally to reset some indicators before we continue our move down. I would expect a lot more volume here if this really was the start of a new bullish wave up, or a new impulsive wave up. So my bets are all in the bullish case right now. I closed my longs out earlier this morning, and I didn't have many longs. I missed going long here at 6.8K, and I have a rule where I don't chase trades, so I didn't bother chasing it up here. So I did miss out on that move from 6.8 to 7.5. That being said, I had picked up some altcoins right around here. I picked up some XRP, and I picked up some ADA right when that Coinbase news came out. And I went ahead and I sold those altcoins right at about $7.5 thousand, when Bitcoin was about $7.5 thousand. XRP I got in. I know everyone's saying, oh, it's tanking now. Yeah, but I got in at what was it, what's it at now actually? XRP. Let's find out real quick because I'm curious now. So XRP is currently at 46 cents. Yeah, so I got in at about, must have been 40, there you go, about 41 cents. And I sold at the top here right at about, not 52 cents, I sold at about 49 cents. So 41 cents to 49 cents, a profit of close to 20%. Not bad in my eyes. So made a 20% profit on my Ripple there, and then I also sold ADA. I made a decent amount there because of the whole Coinbase announcement. So I got on my alts over here. Like I said, wasn't holding any BTC. I did buy some BTC on a retrace when it dropped down to 7,250, and I'll explain why in a second. But I did sell that scalp as well at about 7,500. So I'm completely out of my longs at this point, expecting a drop down. Looking to short, haven't opened any shorts yet. Waiting for some higher targets to open up some shorts. But now let's go ahead and talk about the bearish case and the bearish short-term count, which would be this count here. And we're going to go ahead and break down this wave here to show you guys why I closed out my longs right now, and to show you guys where I plan on opening shorts. I've talked about this on Twitter. I've talked about it in my Discord if you guys are part of it. However, if you're not, we're going to go ahead and talk about it right now. So I'm going to go ahead and clear out this stuff here. and we're going to talk about this particular wave up and what I'm seeing here. Now, remember, this being the bearish scenario, I'm seeing this as an ABC, right? And we're going to talk about the C wave here and why I think it's nearly complete and why we should be expecting a drop soon. So I'm going to go ahead and zoom in. Let's go to the 15-minute time frame here, and let's see what we can find. So this is not a fun wave. This C wave is not easy to count, and the count that I have for it isn't ideal. That being said, it's the only real count that I can see being ideal or being valid, and the reason for that is quite simple. On wave 2s and wave 4s, the retracement waves in any impulse. So if we have a 5-wave move, 1, 2, 3, 4, 5, whatever it is, let me go ahead and draw it out. If we have a 5-wave move, right, we would expect this wave 2 and this wave 4 at minimum to retrace 23%. All right. So wave 2s tend to be the deeper ones. They tend to retrace 50 to 61.8%. Wave 4s tend to be more shallow. They tend to retrace 23 to 38%. However, we would expect a minimum retracement of at least 22% on either these wave 2s or wave 4s. Anything less than that, and they would be so small that they wouldn't be considered retracement waves, in my opinion, and we'd consider them part of a larger impulsive move. So keeping that in mind, we're looking at this structure here, and we're trying to find out where the deepest corrections were so we can establish what the wave 2s and wave 4s were. And right away we see if this was the end of the last wave down and we're moving up now, we have a wave up here and then we have a deep retracement here. And then after that we're going up, not much of a retracement here, we're going up, not much of a retracement here, we're going up, and then we have our next deep retracement, somewhat deep retracement here. So the way that I have this count labeled as is the 1, 2, and then I have the 3 up here. This big structure here was the 4, right? And then I have us going up for a 5th wave. Now, the reason I say this isn't ideal, let me get rid of this as well. The reason I say this isn't ideal is for a few reasons. The first is this first wave up seems to have some sort of like a 3-wave structure. It doesn't look like a clear 5-wave structure. Not at all. It doesn't look like a clear 5-wave at all, but I'll show you why I have that as my first wave. Second wave, deep retracement. We got our 3rd wave, which almost had no retracement. It's very, very little retracement as we go up here. And then we got our 4th wave here, and then we got our 5th. And another thing that I like to look at is, I do use RSI, we'll go over that in a minute again. But just over here, I've had some people say, okay, well, let's label this here as the 1 somehow, and then we'll make this 2. And then this will be the 3rd wave up, the 4th wave, and the 5th wave. Now, my only issue with this is if we go ahead and measure the retracement levels of that particular 2, from there to, let's see here, from there to there, right there, it's shy of the 23% retracement. So it hits maybe 20%, maybe 17 to 20% retracement. It doesn't quite get to that 23% retracement level, which is why I find that hard to believe as a wave 2. It's possible I could always be wrong. I'm not saying I'm always right, but that's the reason that I prefer this move here as the 1 and the 2, because we get that nice deep retracement for a wave 2. And there's a rule of alternation in Elliott wave, which states that when you get one deep wave correction, the second corrected wave tends to be a shallow retracement, which is why normally we see a 2 being deep and the 4 being shallow. So if we make this our 1 and our 2, and we go ahead and measure this 3rd to see what the 4th wave was like as far as retracement levels go, we can see that the 4th wave retraced, oops. The 4th wave retraced just about 23% right there. So that's the top of the 3rd wave. Then the 4th wave retraced 23% on the dot. And another thing is this 3rd wave is clearly extended because it's a lot more than 161% of the first wave. So anytime you get a wave that's over 161.8% of the first wave, we would call that an extended wave. Again, typically we only see one extended wave per impulse move up. However, there's a rare chances that we do get 2 extended waves, and I've talked about that before, but like I said, it's rare and we don't expect it. So we're gonna see this as a first and a second, a very long extended 3rd wave. And this is another reason why I don't think this count is ideal and why it's hard to count this, because this 3rd wave is just so incredibly long. I believe it's like 500% of the first wave up, which makes it less likely. Normally we'll see a 261% extension, we'll see a 361% extension once in a while. I think I've almost never seen a 500% extension. It doesn't mean it can't happen, it just means it's very unlikely. But like I said, the retracement levels and any of these little retracements that we're seeing here, to me, aren't deep enough to call them a wave 2. So I'd have to assume this entire structure was a wave 3. And on top of that, our wave 4 retraced 23% of this structure, which works out perfectly for what we're looking for. Furthermore, whenever we do get extended waves, it's well known that the fourth wave will only retrace 23%. And if it goes below that, then the absolute max we'd expect it to see is a 38% level. But we don't expect it to go any more below that if it's coming after an extended wave like we're seeing here. So the fact that we have a third extended and a fourth ending at the 22% retracement, that all fits very nicely. Now that being said, the fifth wave, this last wave up that I'm expecting us to get, which is why I haven't opened up shorts yet because I'm waiting for our fifth wave, we would expect it to not extend. Like I said, in any impulsive structure up or motive wave, we would expect to see only one extended wave and not two. So that being said, if we take the measurement of our first wave here and project it from the bottom of the fourth, let's go ahead and do that. So we're going to take the measurement of our first wave and project it from the bottom of our fourth. Oh, that was wrong. There you go. So take the measurement of our first wave from the bottom of the first wave to the top of the first wave and project it from the bottom of our fourth wave, which is right here. We can see that our fifth wave should not go higher than $7,668 in order to avoid a double extension. And then the other thing is when we get an extended wave, the other two waves, so if we get an extended third, the first and the fifth, tend to be equal. So in that case, our initial target would be a 1-to-1 ratio between the fifth wave and the first wave, which in this case gives us 7503, which we already hit. And then our second target would be the 1.618 extension of the first wave. And these are going to be targets for the fifth wave. Anything above that would give us a double extended wave with our third extended and our fifth extended, which is rare, which it can happen, but like I said, it's rare. So I'm not betting on it. And right now we're consolidating with what looks to be our fourth wave. However, we did spike up already and hit 75.81. So could this have been our fifth wave and could we be heading down now? Possibly. But I'm going to play it safe here. I'm not going to chase the trade. If the trade comes to me and my shorts get hit and they get filled, that's great. If not, I'm not going to worry about it. I'm going to go after the next trade, which would be a long or another short down here upon confirmation that we have completed this structure up here. And so these are my targets for the fifth wave. Based on the price action we're seeing, I am hoping for one more wave up to fill up some of the shorts that I have. And also keep in mind, in this scenario, with this chart that I showed you guys, we have a lot of resistance here, which means we have a lot of liquidity here. We have stop orders probably right beyond this resistance, right beyond 7.8. A lot of people have probably a short order set here and have stops right above it. And what we tend to see is a run, a push into this zone, a push to trigger those stops to fill more shorts before we reverse. So ideally, I'd like to see us move into this zone to hit that liquidity. I'd like to see a move into 7.8. $8,000 to $8,000 to get that liquidity move. However, like I showed you guys, based on my Elliott wave count, I wouldn't be expecting more than 7,670. So it's possible that everyone's kind of waiting for this zone to hit, and it's possible we don't get there and simply reverse before that. A lot of shorts waiting to be filled here, and it's possible that we actually don't hit them to fill them and surprise everyone. The market tends to do what most people least expect. So if everyone's expecting a move into this zone, maybe we fall short of it, like I'm seeing with this Elliott wave count. Maybe we don't make it there and we fall before that. Or alternatively, maybe we do make it in there, we hit this pocket, get some liquidity, get some stop runs, shoot up a little bit higher than expected, and then come down. So those are the two possibilities that I'm seeing. I'm betting on this one based on my wave count. We could get an extended fifth. Right now, this structure is pretty unclear. I know it's some sort of a fourth wave consolidation. Whether or not we already completed the fifth or whether or not we already started it, I can't tell right now. So I'm just playing it safe at the moment and waiting for my shorts up here to fill. So that's the current game plan. That's the analysis of this really tricky wave right here that I'm seeing. Again, in the bigger picture, I'm expecting this to be the bearish count where we have an ABC completing this, getting rejected around 7.8 to maybe 8,000 if we hit that liquidity zone, and then continuing our move downwards to complete this Y wave in the bigger picture. And that's about it for now, guys. I can't remember anything else I really wanted to cover right now. This was just a quick video update I wanted to get out for those asking me about the big picture. You guys know what I'm planning to do now in the short term, and you guys know what I'm seeing here in the long term. So any other questions you guys have, feel free to contact me through Twitter, on Discord. You guys know where to find me. I'll try and get back to you guys as soon as I can. Lately, I've been super busy with work, and like I said, I was out of town the last week, so I am behind on a lot of my DMs and a lot of stuff. I'm going to try and get back to it as soon as I can, but just bear with me. And if I don't reply the first time, keep messaging me. Eventually, I'll get back to you. So if you guys like this video, if you found it insightful, please like, share, and subscribe. And stay tuned for the next one. Thanks.